Next heading you can write terms. Terms related with stock exchange. Important terms related with stock exchange. So you will see different terms when it comes to, most of you, if you have once invested in stock exchange, you will be knowing everything, but still formally we will go bull. Bull. What do you mean by this? You are an optimistic investor and you are expecting that the price will go up. That person is what? Bullish investor. And that stock is what? Bull stock. Okay, just write. Bull is a person or speculator. Bull is a person or speculator who purchases shares in bulk. Who purchases shares in bulk as optimistic speculator. As optimistic speculator. So bull is a person or speculator who purchases the shares in bulk as optimistic speculator. So what do you mean by bull stock? The shares whose prices are rising. Okay, so the shares whose prices rising. So you are expecting the prices are going to rise, so that is what? Bullish investor. Okay, then what about bullish market? Bullish market. So bull stock, bullish market. Bullish market means when index of a stock exchange is going up, if Nifty is going up, if Sensex is going up, that is what? Bullish market. So bull or bullish market. The stock's price going up, that is bull stock. The entire index going up, that is bullish market. For example, the price of Reliance is increasing, but the market, the Nifty and Sensex remain the same. That in that context only bull stock, but market we cannot say bullish market. Okay, so here bullish market means the index is increasing, the Sensex is increasing, or Nifty increasing, or whatever indices that we have discussed already, increase will be there. Next, bear. Next term, bear. So exactly the opposite, right? In case of bull, it is a optimistic investor. Here, a pessimist investor. So you can write as a person, or you can write pessimist investor or speculator. Pessimist investor or speculator who sell shares. Who sell shares. So in case of bull, he will buy share. So he will buy at very cheap price. So he is expecting the price of TCS. Okay, let's say price of TCS is, let's say 300. So he is expecting that it will go to 350 or 400 like that. So he will buy this share. So that is bull, and this investor is bullish investor. And this stock is if this price is actually moving, it is a bull stock. Okay, now if the person is expecting that it will come down to 250 or 200, so he will sell the share. That's a bear. So bear is a pessimist investor or speculator who sells shares. Now bear stock, shares whose prices are falling. Shares whose prices are falling. So what about bear market? The index of stock exchange is falling. So Nifty will come down, Sensex will come down, right? When index of stock exchange falling. Index of stock exchanges falling. Third point, speculation. Speculation. Right. It refers to purchasing a commodity or security. It refers to purchasing a commodity or security with an intention to sell it in near future to make profit. Okay, so speculation means purchasing a commodity or security with an intention to sell it in near future to make profit. See, speculators actually keep on buying and selling. These intraday, etc., all these are speculators. Okay, so their intention and investors' intention is different. Investor, it's long-term investment will be made. When we talk about speculation, they keep on buying and selling. Okay, today buying, tomorrow selling, or 1 week they sell. As soon as the price is rising, they will sell. Immediately they see a price rise, they will sell. Like they target like 5%, 10% increase, immediately they will sell. But that's not the case with investor. Will invest for long term. Now, is it required? Speculation is required or not? Is it desirable? Is it desirable?
Yes, sir.
Yes, it is desirable, and even SEBI promoting this speculation. Okay, but now there are some volatility in the market, so some new rules are there, but we don't want to get into that. Actually, speculation is promoted by SEBI. What is the reason? But over speculation is not promoted. Then in that case, upper circuit, lower circuit, etc. you will see. You don't want to get into all those technical terms. Why SEBI promoting speculation? SEBI promoting speculation because if the price is coming down, what the speculator will do? What they will do?
They'll buy.
They will buy. When they buy, what will happen? Demand will increase, right? Demand will increase means price will increase. So when the price is coming down drastically, because of speculators, the price will increase. So speculators actually will help to act as a support. So beyond a point, it won't come down. Speculators there will act as a support. Okay. At the same time, price went up. Price reached at this point. It is going up. Then what the speculators will do? They will sell. So supply will increase. So what will happen? Price will come down. So speculators in that context will act as a resistance. So here the speculators acting as a support. If the price is coming down, so it won't fall more. Similarly, it won't go skyrocketing. It won't go like this also, because they will act as the resistance. As soon as they see high prices, they will sell, because their intention is make profit short term. As soon as they see 10% return, immediately, maybe it depends on the person, 10%, 15%, 5%, 3%. As soon as they see that price, they will sell. So supply will increase. Automatically prices will come down. So what is their role in the stock exchange, in the market actually? Their role is basically to stabilize the prices. Because of that reason, SEBI is actually promoting the speculation. Okay. Fourth one, arbitrage. Arbitrage. Arbitrage means what? For example, this is market A and market B. Same item, cost in market B is less than market A. So you will buy from market B and you will sell at market A. Okay, so here in Kerala, if the prices are cheap, okay, you will buy from Kerala and you will sell in Tamil Nadu. So this is what you mean by arbitrage. Okay, just right. It refers to purchase of a commodity. It refers to purchase of a commodity from a cheaper market, for selling it immediately in a relatively dearer market. For selling it immediately in a relatively dearer market. Okay, now what is the difference between 3 and 4, like speculation and arbitrage? What is the difference? Main difference?
Market is different.
No. See, in case of where the risk is more, in arbitrage or in speculation, where the risk is more? In speculation, risk is more because
Speculation.
yeah, you don't know whether the price will go up or not, right? You are expecting the price will go up, and that will be fine if it is going up. If you have a very good knowledge in market and if you can do the analysis and everything, still you may go wrong. But in case of arbitrage, you clearly know here the price is less and here the price is more, so you can buy from here, you can sell here. Okay, so that is the main difference. In case of speculation, you don't know what is going to happen. The price may go up or down. But in case of arbitrage, you clearly know, you already know the difference. For example, if this pen cost 25, the one which I am writing in Kerala, it may cost 20, the opposite, 30 here. You can buy from here, you can sell here, no doubt in that.
So buying from one market and selling in another market is like you're buying from BSC and selling it in NSC?
No. Here I am saying this concept I am explaining.
Okay.
What do you mean by arbitrage? But I will revisit this arbitrage when we discuss about options and futures.
But how this arbitration will be done in the real stock market?
We'll discuss when I discuss about
Okay.
options. Okay. When at this point of time, it will be difficult to understand. Okay. So when we discuss about futures and options, it is basically for the ultimate ideas, arbitrage and hedging. But now people are using, if you're trading, you are using it as a speculation, futures and options. But it is basically done for this hedging and arbitrage. But we'll come to that. I'll revisit to this. Okay. So now, is it desirable? Arbitrage is desirable. It is also desirable because the price difference will ultimately come down, right? It will come down automatically. With time, this difference will come down. So, both will be equal with time. So, arbitrage is also considered desirable. Fifth one, short selling. Short selling or shorting or selling short. All are same, short selling. Okay, short selling means even if you don't have the share, you can sell the share first with an agreement that you will buy it back, before the end of the day. Mostly it is done in case of intraday. I told you futures and options I will discuss later. Now, normal case, you will sell your share first. Okay, let's say market opened maybe 10 o'clock. You find that the price of TCS reached at its top. You think that it won't go further. So at this point of time, even though you don't have the share, you will sell this. So you are expecting that the price will come down. Let's say this is 300. If it will come down to 280, you will purchase it. So the transaction is complete. So this is what short selling. So who will do this? The bearish investor will do this, right? So his idea is that the price will come down. So just write there. Under this, an investor sell a commodity or security. An investor sell a commodity or security which is not possessed by him, but such investor has to purchase it, within a specified time period. Okay, so in case of normal trading pattern, if you see, for example, if I'm talking about Wipro, so at this point of time the price is, let's say, 290. Okay, so if I'm expecting that the price is so high, it is the year high, 52 week high. So what I think is, so this is the highest, now it will come down. So I'm going to sell this now. So if it comes to 280, I'm going to make profit here because I can buy it at 280. If it goes further like 300, then in that context I will make loss because I need to buy it at 300. I have already sold at 290. Okay, so in that context, if the price is going up, here there will be a loss. If the price is coming down, you will get the profit. But when you are doing it, you are sure that this is the maximum price. At that point only, you will enter into short selling. Okay, sixth one, buyback of shares. Buyback of shares. Under this, a company purchases its own shares. Under this, company purchases its own shares from the investors. Or shareholders. It reduces number of issued shares. Number of issued or outstanding shares. Outstanding shares means total number of shares only. It reduces number of issued or outstanding shares of the company. So number of outstanding shares will reduce means what will happen with the dividend? Dividend is actually profit divided by number of shares, right? So number of shares will come down means the dividend will increase. So in this context, what will be the impact in dividend? Buyback of shares. The dividend will increase. Just right there, it increase the dividend per share. It increase the dividend. Now this word also, insider trading. You will come across this. There is actually an offense. So insider trading. Next point. Insider trading, it refers to buying and selling of shares of a company on the basis of price sensitive unpublished information. That means from the company, already the directors of the company or the promoters of the company, they know the information, and based on that they will buy the share. They can fluctuate the prices also of the share. Okay, they can also do speculation. So that is what insider trading. It refers to buying and selling of shares of a company on the basis of price sensitive unpublished information. That means the information with the insiders. So they use that information to make money for them.
Sir, please repeat.
It refers to buying and selling of shares of a company on the basis of price sensitive unpublished information. Price sensitive unpublished, not known to the public, but only insider people know. So based on that, for example, this Reliance is entering into a deal with Google, right? So if this is not leaked to the public, and based on this information, Reliance, the insiders keep on buying the share, okay, at the lower price. Let's say 1900 they are buying the share at this price. Now once this deal is out in the public, so already they bought the share at this price, so much of shares based on the insider information. This will go to like 2500. So just in a matter of 1 day or 2 day, they are making a profit of 25%, and immediately they will sell the share, right? So this is what insider information, insider trading. Okay, so now few other terms like outstanding shares, public float, face value, market capitalization, FPO, IPO, all this we have discussed. You want to know this? Blue chip stocks, high market capitalization. What do you mean by blue chip stock? The big company stock. Simply if I want to tell you, blue chip stock means a big company having high market capitalization. Okay, like Reliance, Infosys, etc. These are very high, huge companies having huge market capitalization and have the power to change the index also. You can see if index remain the same without any change, but if Reliance is increasing, even though index is going slightly negative, but Reliance is going fast, means index will turn. So that capacity is there for Reliance, like that. So blue chip companies, blue chip stock. Outstanding means, I've told you, total number of shares. If you want, you can write outstanding total number of shares. So what do you mean by public float? Public float means the balance from company owners. You won't count the company owners share here. For example, outstanding, that is the total share, right? So outstanding minus owner's equity or owner's share. That is what you mean by public float. Right? If the company won't fund, they won't get 100% from the public, no. They will have the owner's share, and let's say 30, 40, 30% etc. only they will mobilize from the public. So when we talk about public float, total share minus owners, whatever is given to public, let's say 30% or 40%, like that. What is the face value? In yesterday's example, I've told you, for example, initially it is 10 rupee. When IPO issued, so face value means the price of the share at the time of IPO, the first value of the share. That is a face value. When it is issued for the first time, what is the value? That is a face value. What is the market value? Market value is the current value, the price at which it is traded, right? That will be based on demand supply. It cannot be fixed. Market value cannot be fixed. Today Wipro, let's say 283, okay, tomorrow it will be 290 or it can be 270. So this is market value, which is based on demand supply. Face value when it was issued at IPO. Okay, market capitalization, I've already told you. Market capitalization, what is that? Number of shares into share price. Okay, so market capitalization, can I say it will be varying based on the price of the share? Because price of the share will vary, share price, right? So price of share will vary based on demand supply. So market capitalization also keep on varying based on the demand supply. Okay, so IPO, then IPO we have done, FPO we have done, initial public offer, follow-on public offer, primary market, secondary market. Portfolio means, you will see this portfolio. What is this? Collection of stock of individual. So then collection of stock of individual. Your portfolio means the collection of stock of you. Collection of stock of individual. You will see these terms in stock market.
Sir, what is portfolio investment?
Portfolio investment is different. That is that I will discuss under foreign investment. Not at this point of time. We don't want to discuss foreign direct investment, portfolio investment, foreign institutional investors. We will do the next module. Actually, I have uploaded in the app that videos, foreign investment related videos. But that I will deal in detail in the next session, next module. Portfolio investment is actually related to the foreign institutional investors, foreign investors in the stock exchange. We will discuss that. Here I am talking about portfolio. What do you mean by portfolio? Show me your portfolio means your collection of stocks. Like even if you are trading in the stock market, if you need to check like your profit and loss, you have to go to your portfolio like that. Just to know this word, I have explained that. Portfolio investment is related to foreign institutional investment. That also is related to stock market, but that I have to discuss under a separate module, foreign investment. Not here. A big concept it is. So, any doubts?